delay. Okay, let's see. Give it a couple of minutes to render. Okay, good morning, everybody. I wanted to give a happy Tuesday. It's such a pretty weather and so awesome outside that it makes it a little bit hard to be here enclosed indoors in South Florida, but we're gonna make it a little bit happier. First and foremost, this is Nichole. I'm Roni. Wanted to welcome Nichole, but before we even start with talking about what's going on and how to do things and what a mess and what it's not that much of a mess and everything that we're going through, wanted to say thank you to all our first responders, to our teachers, to our medical staff, to all the businesses that are still essential and making us still feel a sense of normalcy. I'm sure Nichole will agree with me. It is so, so very important. So thank you, everybody, and thank you for logging in. On that note, Nichole, how about you introduce yourself? Most of these people actually know me and know my possibility of talking and non-shutting up. So go ahead, Nichole.
Nice to see everyone today. I am Nichole Guthneck of U.S. Mortgage of Florida. I come to you with 23 years experience in mortgage lending, and I'm teaming up with Roni today to inform the community on all the issues surrounding your mortgage, lending environment in general, whether you currently are in a mortgage, in the need to obtain one, have questions about how to repay your current one, refinancing, just the myriad of questions and uncertainty that exists due to COVID-19. And again, I thank everyone as well for everything that everyone is doing out there in the community, from our first responders, medical staff, nurses, doctors, and just the everyday citizen. It's a very difficult time, but everyone is doing great.
Okay, thank you, Nichole. So main question I've been getting obviously is, hey, the government said we don't have to pay our bill for the next few months. What is that all about? It's that word that I hate, that F word that everybody's talking about. Can you explain that a little bit better for us?
Absolutely. So that F word that everyone's talking about is the word forbearance. And it sounds attractive, and people in these times are drawn to immediately say, that's for me. Well, before you decide if that is for you, I cannot stress enough that you read the fine print. Forbearance is a period of time in which your mortgage servicer will allow your mortgage payments to not be collected and legally not exercise the right of foreclosure. Forbearance does not mean that those payments will never be collected. Forbearance does not mean deferment. Forbearance means a period of time in which your payments can be paused. The key to this is that the federal government is working with the mortgage servicers and large banks to allow forbearance plans. But each bank, each lender, each servicer is permitted to come up with those terms. So when you see, I can pause my mortgage payments, I don't need to pay for 3 months, there are certain servicers that are putting in the fine print, at the end of 3 months, you must pay in full the 3 months.
Sorry to cut you off. So in essence, what you're saying is that I have 90-day reprieve, but on the 91st day, I'm due to pay that balloon plus the current month. Is that correct?
That is correct for some servicers. Other servicers are permitting the 3 months to be tacked onto the end of the loan. So if you have 26 years of repayment left, if you're in a 30-year mortgage and you've paid for 4 years, you will have 26 years plus 3 months, and they are allowing something more reasonable. There is no federal regulation on which each servicer is permitted to do. They can come up with the agreement themselves. The minimum amount they're allowing is 3 months. Some servicers are permitting forbearance plans to be extended up to 12 months, but you must read the agreement you're signing, because it can be a way to lose your home if you do not know what you are signing. Because if you are not in a situation to repay 3 months of mortgage payments plus the current payment, what really are you signing then? You may be causing a further catastrophe. So it is very important you understand what you're signing. And if you do not, there are community advocates like myself or Roni. We can review the documents. We can get you in touch with people that can make sure you understand what you are signing.
Okay. How do we know if our mortgage company is willing to work with deferment instead of a balloon situation? For example, I have a certain company which is pretty large, and I was told, no, you will have to pay in full after 3 months. We were not giving another choice. So how do we know exactly what, where, and when?
Each of you would need to call your current servicer. Wells Fargo, Mr. Cooper, Bank of America, those are typically the largest servicers, each of which right now, today, have a different policy. And each day they're changing their policies. So be informed, make an informed choice, make sure you understand what your servicer is stating. I'm also reading and being contacted that the same servicer is giving different information, different days, different times, or different customer service representatives. So ask for a supervisor or escalate, because there's a lot of misinformation in this time.
Okay, that's a little worrisome, obviously. Kathy, my friend Kat, is asking how many lenders has anyone really found puts that 3 months on the back end? All I've seen is balloon payments of 90 days. And that's what I've seen. And from my clients, unfortunately, that's what I've been seeing. You know, that's a certain situation in which, you know, as Nichole said, we have to make those phone calls. Do you know of any that are already doing this?
All of my customer feedback has been that their servicers are ballooning and deferring for 90 days and requiring payment in full of those back payments after 90 days. From my understanding, the servicers are right now applying this in hopes that the stimulus, the CARE Act, and the different federal funding will reach consumers. However, that really is not a reality. And I personally believe in the upcoming days or weeks, we will see more lenient guidelines and more reasonable repayment terms.
Hello? Oh, sorry about that. We had a little technical difficulty. So the other question I think people are asking is as to what if, let's say I turn around, I'm an employee, I work for company XYZ, and that company furloughed me. They told me until this is blown over, I don't have a job. Some people are being told you'll come back the day we reopen. Some people are being told that's it, you're done. What happens with unemployment? If you turn around and you file for unemployment and then you want to get a mortgage, your plan is to purchase a house, your plan is to, you know, you have real estate goals, be it to purchase, be it to refinance and all that great stuff. What happens with that? Will that hurt me? Will that affect my credit? What do you suggest?
So long as at the time you're applying for a mortgage, you're employed, the past unemployment will not hurt you. However, at the time you're on unemployment, you cannot gain a mortgage financing loan. Once you return to work and you have your first paycheck stub, you will be approved for a mortgage subject to your credit score. Your unemployment also will not have a derogatory impact on your actual credit or FICO scores. It is not anything that is derogatory in any way to your credit.
Okay, so if person Michelle turns around and says, hey, okay, unfortunately, this is my situation, but Ronnie, she's been wanting to purchase a house next year or the end of this year, and hopefully, you know, she can do it. She won't have a problem. She can call you up and say, here's my plan. And, you know, from this plan, we can establish, you know, all the grounds. Can you get people now ready for what they would need in order to either get a new house or refinance? Are you guys still working on all that stuff?
Absolutely. And if a consumer comes to me right now on a furlough, a layoff, complete termination, you would be pre-approved subject to your return to work. And I would rely upon the industry standard for the income typical to your job position. And we'd have a long talk about what was your affordability factor based on the amount of income you think you'll earn once COVID-19 shelter in places and these things have been lifted. There's no reason to stop planning, stop dreaming, stop focusing. Those are things that COVID-19 cannot do to us. And on a positive note, we will return. We're resilient people as a country. And I personally am helping right now every single candidate that comes to me for a purchase or a refinance. You know, there's other loan officers out there that maybe are pausing. I'm not. It's just very important that you work with the right people that are going to be connected and committed to helping you throughout your process and the things that may change on a day-to-day for you individually. And every loan needs to be catered to your individual needs. Everyone has a specific financing situation.
So Lori's asking, does anyone know what Chase or Specialized Loan Services is doing? So Lori, what Nichole was saying before is the best thing to do is unfortunately to call. I know there's Mr. Cooper had a 3-hour wait yesterday. Everybody has something a little bit different, but it is the best choice. And Nichole, correct me if I'm wrong, it is the best choice to give them a call and to ask for a firm something in writing saying, here's what we're doing, here's how it's going to go. That is the best suggestion. Is that correct?
It's absolutely the best suggestion. Call your servicer. Chase is changing each day. Mr. Cooper, Bank of America, the hold times are extreme. Try to be the first person in the morning. If you want to set your alarm, get in there early, and they will inform you exactly. There is not a federal guideline. Each servicer is permitted to design their own forbearance plan, and each will vary.
Okay. So the other question Ruben is asking is about refinancing. Is this still a good time to refinance? What are our interest rates at? What is going on? I can tell from my side, I still have buyers buying. We just did a virtual showing here in Embassy. We just, you know, and we'll see how that goes from there. I have listings that people are still coming to see. And I have some of my older clients, you know, that are actually refinancing with Nichole, so it makes it easy. But they are refinancing and they are looking forward to understanding, is this still a good time? Ruben purchased 2 years ago and he lives right here in Cooper City. And he purchased, I'm not sure what his interest rate is. I'm not sure where they're at, but I'm sure 2 years ago, from my knowledge, we weren't at the 3s.
It's a very good time to refinance for a few different reasons. One, we have historical low interest rates. They are slightly higher than the record low, which was March 6th, slightly higher. However, reasons to refinance. Number one, there are many clients accessing the equity in their home. That is giving them the nest egg that they need to get through these COVID-19 issues. Accessing the equity in your home is much more economic than utilizing cash advances on credit cards or revolving consumer credit debt, which has an APR well above 32%, regardless of if they're telling you it's 3%, that interest is compounded daily and it's set up in a way in which you won't overcome that debt. Number two, you may be in a situation where you want to simply reduce your payment. You don't want cash out. You don't need to access the equity, but you can save money per month because you're paying at a higher interest rate. Anyone with a rate above 3.875 on a 30-year fixed mortgage should contact someone to consider refinancing. In addition, there are people out there right now, interest rates on 10, 15, and 20-year rates are in the very low 3s to high 2s. So you have situations where you may want to reduce the term, you may want to utilize the record low rate and really drive down your mortgage balance and eliminate many years off of your loan. It is still an excellent time to refinance. However, you must currently be employed to refinance. If you are laid off or on unemployment, you will not be able to refinance.
Okay, so to your question, Ruben continued asking questions here, and I'm sorry, I'm looking down all the time. I'm looking at the questions. Your closing costs, Ruben, for a refinance is something a little bit different. It's not the closing costs that you have on a new home purchase, but you still have closing costs. We work with Florida Title Center, Esti Levita Zulay, who I will have on in the next couple of days, and she'll explain to you as far as, you know, either doing a quick claim or changing things over, and as far as refinance, what the closing costs are, as far as the title side, as far as, you know, the paperwork and everything else. Nichole can attest to the fact that we still need an appraisal for a refinance. There's a lot of different things that we have to go through. And you know what, Nichole, take it away.
So yes, we still need a property appraisal. Accommodations have been made where drive-by appraisals are permissible so that the appraiser nor the consumer is jeopardized at all in any way due to having shelter in place. So the property appraisal, there are, you know, revisions to that. And then for everything else, you just need to evidence your current income, and you want to have a credit score to receive a favorable interest rate above 640. And if you believe you're a candidate with a 640 credit score, your current interest rate is what I mentioned before or higher, then you should definitely have a no cost analysis to see your refinance options. That can be cash out, debt consolidation, or just rate and term. So you can take cash out of your property, you can consolidate debt and pay off your credit cards or installment loans, or last but not least, you can just do a rate and a term, which is lower your rate and or lower your term. So there are many ways in which you can receive financial benefits to your current mortgage by refinancing.
What about new purchases? So you and I had in the last couple of weeks, actually in the last week, I've lost track of time, sorry. In the last week, I've had personally 7 closings, one of them being one of my highest closing, which was a jumbo loan. And are people still getting loans? Did terms change? Did FHA terms change? VA, FHA, conventional, jumbo, any of that sort?
People are buying homes. They are doing virtual tours. I lend throughout the state of Florida, concentrated in Southeast Florida, and I'm probably receiving 2 to 8 contracts per day. Given the day, people still need to move into homes. The restrictions from FHA, VA, and jumbo lending are the following. The lower end credit score spectrum has been eliminated from the marketplace. So sub 600 credit scores, you're not seeing interest rates or terms available for those consumers. However, we can work with you on the steps that you need to take to increase your credit score and still make home ownership possible. Jumbo lending has many restrictions. It's a strong oversight right now. It hasn't stopped. But instead of a specific guideline of a specific debt ratio and a specific term allowable, jumbo lending is being done on a case-by-case basis. It is still being done, and there is a strong review of it. So you will see in the marketplace that people are still buying homes. The availability of money is absolutely there. We are fully automated and remote. For example, if you work with me as a lender, you do not have to meet with me in person. I offer video consultations to answer your questions and concerns. The application experience is completely online, and your ability to provide me with the documents needed to validate your income and assets is completely web-based and secure, where you can upload in a portal. So you can essentially purchase a home without leaving your home. Should you choose to not inspect the property and do everything virtually, the money is still there. The appraisers are still appraising homes. Everything is in place, and we don't intend on stopping that. In fact, we are perfecting that process, because we, as an industry and finance, believe that after COVID-19 is over, the world will change in the way in which we do things. And so we're becoming more and more automated and virtual. We're improving these techniques during this time.
So the real estate side is also improving on that side, not only the financial. The real estate side, what we're doing is we're doing a lot of virtual tours. We're doing a lot of different elements. All our materials anyhow is online. Signatures are online, and closings have been permitted to do online, remote online notarization. Sorry, I had to remember the acronym. I know it's RON, which is very not hard for me to remember, but that's been approved. So everybody, as far as new purchases, we're still out there. We're still working. We're open for business, and we're actually, I think, being confined to our homes is driving us a little bit crazy. I'm sure Nichole as well. We're all extroverts in this business mostly, but we are all open. We're all working. We're all doing what we can. So if you have questions, I'm always reachable. I can always connect you with Nichole. Nichole will give her information at the end as well. It's on the event. But the people that have contacted me about, what do I do? I really want to purchase. Is the market going to crash? We don't know. We don't know what's going to happen. There's actually forecasts that came out today in the Wall Street Journal that say that the market's not going to crash. It's going to stabilize in a different way. It's going to take a turn in a different way, which, we all thought in the year 2020 we'd be flying cars and all that great stuff. So instead of flying cars, we have virtual transactions, which is kind of fun. Kathy is asking, if someone were to do refinance cash right now, is that process slowed down or expedited right now in today's climate? We have 6 mortgages with 4 renters paying their rent, which is going to become problematic really soon, and so a refi may be needed. So
refinances are not slowed down. They're normal turn times. There's not an expedition of the process, because the normal process still occurs, which is appraisal for collateral and income and asset verification. Typically, you can close on your refinance within 15 business days if you comply with the document request required.
Okay, Kat, I hope that answers your question. Feel free to contact us afterwards if you want to ask us something personally. I'm getting private messages as well. I actually have a private message from another realtor, not in my office. She's in a pretty big office, but she really wants to understand about this. What is, excuse me, what is, for somebody like us, we are 1099 employees, we're contractors, we do not have W-2s. For somebody like us in our industry, would it be possible to A, refinance, or B, would it be able for us to get a new home? Because there's a lot of people that are 1099 out there, obviously.
Absolutely. Here is the underwriting overlay that has been implemented by the agencies and underwriters across the country for self-employed people. As realtors, you receive 1099 income, you're independent contractors. You are considered self-employed. You would be qualified based on your year-to-date earnings through an unaudited P&L, as well as your last filed tax return. If you filed 2019, they would be utilized. If not, we would utilize 2018. There is one current restriction that could become a little difficult for you. To ensure the stability of your income, since you're currently self-employed and you don't receive paycheck stubs, and to make sure it's on track with prior earnings, we would ask for information related to your current business activities, recent sales, and future sales. And we would work directly with you to come up with an income that's reasonable. So if you're seeing a dramatic dip right now due to COVID-19 in your real estate commissions, it could impact what you're qualifying for. It may not impact what you're qualifying for because your past earnings may not have been needed to qualify for what you're looking for. So your best bet is to contact me, allow me to look at your finances, get a good picture of what's going on, and come up with an amount that you qualify for. And most of my realtors that I'm working with, and there are many that are refinancing or looking to purchase investment properties or primary residences, it has not impacted them. So I strongly suggest that you allow me to take a look at your specific situation.
What if a person, Eddie is asking, what if a person that is currently renting and is, sorry, he keeps on writing, sorry. He's currently renting, he's still employed, even though their hours were cut. Wouldn't that be like somebody that you have to go in specifically and see what their debt is and what the normal process? I mean, their hours have been cut, but they're still employed. They're currently renting, so they are paying $2,500, but we know that the money is there. How would you handle
So in that situation, I would individually look at the hours and see the immediate purchase date. Is it within 30 days? Will the hours be resustained, or do we have to qualify on the current hours received? And I would take a look at the field that you're in, your current income, and we would make accommodations to get you into a new home. If the hours will not be resumed anytime in the near future, then we'd need to qualify you on the cut. But there are many employees who their employers have a specific date of them sustaining their full-time income again. There's definitely not a reason to sit back and wait. You can still be pre-approved. I can work directly with you, and you can still shop for a home and be issued a pre-approval.
Yeah, call me. I'm just kidding. Is there, so let's go back. Somebody just asked a really good question. If we are doing a deferral or forbearance or whatever we're doing, what about the escrows?
That's a really great question. Genius question. So again, most lenders are allowing the complete payment to go in forbearance, which means that they would draw out of your existing escrow account if you're escrowing. If you exclude escrows, you're responsible for your payments. But while under forbearance, they would draw from your escrow account to make tax payments due. And at which point your escrow account goes negative, you'd have to speak to each of your servicers to see what policy they have in place related to that. It is completely servicer specific.
Okay. Well, it's good to know. I mean, we pay our insurance out of escrow, but we still have our taxes, obviously, like everybody else, that were extended until the end of the month. But you know, it's always important to know that you're going to be in a negative, and then you're going to have to build it back up somehow. But it happens, and you know, it's better than the alternative of not paying the whole payment. What else could you tell us? What else could you tell us about the situation of mortgage? Where are you? Where are you going?
So in relations to your current mortgages, I really suggest each and every person in need of forbearance or assistance because they can't pay their mortgage due to COVID-19. When you're off of this Facebook Live, contact your servicers, work with them directly. They will let you know exactly what their forbearance terms are. Do not agree to anything until you review it, until you understand it, and do not sign anything until you're fully informed. These are huge decisions that impact your most valuable asset, which is your home. If you are not in need of payment relief because you can afford your mortgage payment, but you want to make sure you have the most favorable mortgage terms, there is no cost to contact me. I will ask you for your current mortgage statement so I can review your interest rate, your loan balance, and the terms of your existing mortgage. I will then let you know if those terms are the most favorable terms in the marketplace, or work with you if you want to access the equity in your home or lower your payment on a rate and term refinance. It doesn't cost you anything to contact me. You are not charged for anything to have expert loan advice given to you. So I encourage you, if you don't have a situation where you can't make your mortgage payment and you'd like to be sure you have the most favorable terms, contact me. It's no cost, it's no obligation. If you were considering purchasing a home, do not get discouraged. There are many different reports out there talking about the economy and the housing market. This is much different than what happened in 2008. And although none of us can say what will happen, right now, the housing market is sustained. It's not crashing. Lending is available. Money is available. Programs are available. You can get a good feel for what you qualify for. I can discuss with you what those payments will be per month and specialize a loan for you. And you can spend some of this time while you're enjoying your families and children and all of the things that come along with that. A lot of people are online really researching homes that might be candidates for them. And Roni's an excellent resource in your area. So you really don't have to put your dreams, hopes, and desires on pause during this terrible time. And I encourage you to think of the positive things and dwell on them, because we as a people need to keep some positive things in our life as we get through this pandemic.
So there's a lot of people out there that have been renting, going back to our friend Eddie. Is there any assistance for renters?
Renter assistance in regards to they can't make their rent payment right now.
Right.
I'm not aware of any federal funded programs that subsidize or provide assistance for renters, but I encourage the renters to work with their landlords, because I'm quite confident with landlords knowing the status of the economy and the world and the real situations with job loss. I would imagine that if you have a reasonable landlord, they may come up with a payment plan program. My son lives in Orlando. His landlord, he lives in a large complex, is making payment arrangements for him. So I do see large and small landlords specific to the person's plans making different accommodations in order for everyone to get through this COVID-19 situation.
What I mean, you and I live and breathe this every day. What about talking about, we were using some terms that people don't necessarily understand. What about the situation of what is a jumbo loan? What is a conventional? What's an FHA, VA, all that great stuff?
So a jumbo loan is when you borrow more than $510,400. You then go into what's called jumbo loan financing. Conventional and conforming loans is when you borrow $510,400 and below. And when you borrow $510,400 and below, you are called a conventional or a conforming loan. And your minimum down payment can be as little as 3% if you are a first-time buyer. However, if you exceed $510,400, you are jumbo financing, and those programs have very strict guidelines right now. There is limited funding. It is a case-by-case basis, and your minimum down payment is often minimum 20%, but could be upwards of 30%. That is a jumbo loan. Now, I didn't talk about FHA. FHA in Broward County has a loan limit of a little upwards of $373,000. So if you're in the need for FHA financing, perhaps your debt ratio exceeds, which is your debt ratio is the amount that you're borrowing versus your income. Maybe it's a little bit higher than conventional allows. You have a restricted loan amount of $373,000, a little bit above that. So if you are in need of financing, it is very important that we place you in the right loan type so you understand what money is available for you specific to the loan program that you qualify for.
What's the lowest score you could qualify for a loan in general?
So to receive favorable terms, you really want to be at a 640. If you are sub 640 and you're going down to the 600 mark, you can still acquire a loan. However, it will be very difficult when an underwriter is looking at your loan. So certain overlays will apply to make sure that you are set up to succeed.
Okay, perfect. I'm going down my list, you can imagine. And then what about down payments? I mean, talking about the people, obviously, that are doing all the great stuff still around us. Down payments, what is the minimum? Let's say I qualified for a conventional loan, but is there a minimum? Is 3% still the standard? Can I still do that?
3% is the minimum for a conventional loan if you are a first-time buyer, which means that you were never on the deed to any property. If you are not a first-time buyer and you need a conventional loan, the minimum down payment is 5%. If you are going FHA and you do not have to be a first-time buyer, the minimum down payment is 3.5%. And for you veterans out there, the minimum down payment is 0%.
0% for a VA loan.
Correct. And you can be a veteran with an honorable discharge or active duty, and you have 0% down for a VA home loan.
So the VA home loan, we have a lot. We live Broward. We're very close to a few bases. We have a lot of Coast Guards out here. We have a lot of different branches of the military out here. Who qualifies? Is it only military? Is it also police force? Who qualifies for this?
The only people that qualify for a VA loan is a person with a DD 214 who has been honorably discharged or an active duty serving in a branch of the military. Police or any other public servant is not eligible for a VA loan unless they have served in a branch of the military.
Okay. You and I have a brand new buyer, first-time home buyer that we were discussing last night, and we'll call her Dee. And Dee was inquiring, she's a nurse, she was inquiring about all these grants that nurses usually get, or there's a first responders that we're discussing purchasing a home. And you and I did some research and we found out some interesting things. Why don't you talk about that?
So the grant programs are still available to buyers. However, as a whole, the mortgage industry has suspended funding these loan programs for buyers that are receiving grant money for down payment, specifically associated with the risk involved in these types of loans. So the only loan program out there with zero down is a VA loan, and that is backed through the federal government. So the reason that the down payment assistance programs have been suspended is because there's a general appetite for risk that the aggregators are trying to make sure there's loan performance. And there right now is a sentiment that it could be very high risk for someone who is receiving their entire down payment from a grant So these are temporarily suspended.
Okay. I'm getting some private messages, and I understand people, you don't want this to be out there. Nobody needs to know. Bear with me. Cody is asking, their business is still going. They're in the restaurant business. It's still going. I'm reading, I apologize. It's still going. Everything is going, but, he's obviously afraid. He owns his home, and he doesn't know if he's going to turn around and be able to qualify for either forbearance, deferment, or anything else. And of course, Cody, as we said before, you need to call your servicer of your loan and ask them. Now, he's continuing to say, he did hear us about contacting the servicer, but there's an article that came out about if they're federally backed compared to non-federally backed. Do you know, could you elaborate on that?
In regards to the servicers, whether they're federally backed or not federally backed, I haven't received information as such. What I have received is in relation to the CARE Act, which is the funding for small businesses with under 500 employees, you must go to a bank to apply that does have FDIC insurance and is federally backed. I have not heard any information related to servicers and the differences between what forbearance program they're offering, whether they're federally backed or not. That I have not received information on.
Okay. A question came from me, finally. Would you put your house on the market now? To be honest, yes. And I'm not saying, obviously I'm a little bit biased, but the inventory is low. There's still people that are out there looking. We've gone to a 3D and virtual showings, unless the person really wants to see it after they do the virtual showings. We do go ahead and arrange for that. Vacant homes, obviously, that's an easy fix. We show vacant homes. Our biggest concern is obviously for ourselves, for our clients, for our service providers, such as our inspectors and appraisers and all that great stuff. We want to make sure everybody's healthy and everybody's taken care of. We do the max that we can over virtual means. But we are still showing homes. We have our masks, we have our gloves, we double do it. We do mask and bandana, because we want to be healthy. We have children and families as well. And, we understand what it's like, and we want to make sure that you guys are taken care of. We are in the service industry. We're realtors realtors were deemed essential. We are essential. People do need shelter, so we are considered essential, as well as other real estate services are considered essential, such as title and financing and those sort of things. Debbie messaged me saying Wells Fargo is not working with anybody. There's certain things that came out, and Nichole can correct me if I'm wrong. There's certain things that came out that each individual bank can make their choices, can make their rules and regulations, just like associations. They can make their rules and regulations, and unfortunately, that is what it's come to. Am I correct? Yes. So Wells Fargo at this point, unfortunately, is only doing the balloon option. But like we said before, call your servicer, call whoever you're dealing with, and your lender, your loan officer, unfortunately, is not the person who's going to help in this situation. You have to call your servicer directly. To answer your question, okay. So Marie just messaged and said, thank you. You're welcome. Thank you for watching. She's asking if money has been in for offshore. It sounds bad, offshore. It's not offshore. Okay. She's an international buyer. She does live and she does reside here, but she is international. Is there a problem with bringing money? Her down payment would be coming from overseas. Is there a problem for bringing money here?
There is not a problem bringing money here. you will be requested to trail that money in a paper trail. So we would ask for the documentation from the foreign country and bank, and we would trail it into your account in the US. And once we source and season those funds, they would be usable for a purchase transaction.
Well, guys, our 40-minute allotment is almost up. If you guys have more questions, you know, I'm always reachable at 305-942-7446. Nichole, how about you give them your number?
I'd love to hear from you all. I am in Southeast Florida. I do have a Northeast exchange. Don't be scared. 732-814-6249. You can reach me by WhatsApp. You can reach me by cell. I really look forward to helping all of you, and hopefully we schedule another event. So I'd love to suggest something, Roni.
Yeah.
If everyone out there wants to give feedback as to what you'd like to learn about or hear about next, I know I love getting on here and I love being connected with you all, and maybe we can have these more frequently if we receive feedback on really the topics you'd like to learn about or stay connected on.
Yeah, great idea. Great idea. We're gonna try to get with Esty. We're gonna try to get Greg Brunt or Debbie Eaton on here for insurance purposes. You know, everybody's got questions from all over, and we have investors that are watching us from Israel, Argentina, Brazil, and other places. We have our local people, and this recording will be available, so we will post it on our Facebook page. And you know, we're here. If you want to message us a question afterwards and you didn't get to us right now, please give us a call. We're more than happy to help.
And
Okay,
one
guys.
last thing,
Yes.
What is today is changing by the moment. So we will have more of these sessions because information we're sharing today could change. Credit score requirements, forbearance programs, down payment assistance, everything we're talking about has a pulse on it and is changing. So I promise you to stay connected with you all, and I promise to help in any way I can. For anything that you need, reach out.
All right. Nichole, where are you licensed? That's something we didn't ask you. I'm licensed here in beautiful Florida, but you're here in Florida. I can say that for a fact. We had lunch at Cooper's Hawk not too long ago. Where are you licensed?
So I'm here in Florida. My branch office is out of Boca Raton. We're actually considered an essential service, although I'm currently not meeting with anyone. My husband's immune compromised. He's a cancer survivor. I am licensed in Florida, North Carolina, Pennsylvania, and New Jersey. So we kind of use those areas because there's a lot of frequency that occurs between those states. So if you have a need and you are looking or have information or friends or family, I can assist you for any financing in regards to real estate financing, mortgage financing, pre-approvals, refinances in any of those states. And I'm very familiar with the markets and the trends in each of those states.
All right. Perfect. Thank you so much, Nichole. Tell Michael we said hi, and hope he feels good. And everybody out there, thank you again for who's ever out there on the front lines, who's ever is out there and it's still working and providing food and all that. Those that are, you know, just trying to make it day by day. Take it day by day. Stay vigilant, stay safe, stay healthy. Have a good day, everybody.
Bye.
Bye.